Bongiorno, everyone. This is Danny Gould with the Gould team selling Silicon Valley. Welcome to another Silicon Valley market snapshot for the third week now in September of 2019. You're probably asking yourselves, Danny, where have you been over these last 2-3 weeks? We missed you. Well, first of all, I missed you guys too. I was in Italy having an amazing vacation, and I'm back, relaxed, rejuvenated, and ready to kick off this Q4. We're almost there, guys. It's only a few weeks until Q4 begins. And what I wanted to go through today was the heat maps, the data, get you guys caught up on what we've been missing out on for the last couple weeks here on the Silicon Valley market snapshot. But look, guys, it's funny because some things have changed since I left for vacation, but a lot of things haven't changed. Things that haven't changed. People are still talking about the market crashing here in Silicon Valley, which is quite frankly at this point hilarious to me. If you're watching these snapshot videos, you would know that the market is simply not crashing. And but at the same time, a lot of the data points are skewing right now in sellers' favors. And so what I wanted to go through today is really break down some of the finer points, break down some of the finer data tables, and really show you guys why I'm really bullish on Q4 here in 2019. Heading into Q1 and Q2 of 2020, I think it's going to be a really, really good time for home sellers here in Silicon Valley, and I'll show you why. So let's get started. And first thing I want to go through, actually, before we go through the heat maps, which I know if you've been watching these videos is generally what we look at first, I want to go through the data charts. And you'll see why in a second. And if I can pull these up for you, here we go. Let's look at the data chart, shall we? So this is 2019. If you notice, we have 1,415 single-family active homes. Guys, compare that to 2018, shall we? Where there were 1,427 homes. Do you notice something? Do you notice something here that we haven't seen before on the Silicon Valley market snapshot at all in 2019? This is the first time. This is the very, very, very first time in 2019 where our actives this year are lower than actives last year, which means we have less inventory now than we did at this time last year. Well, this is in direct antithesis of what a general market crash would look like, because we would see a meteoric rise in inventory and a sharp decline in pendings. Yet, our pending sales, if you notice, are also up. And this is not the first time that pending sales are up for the single family sector as compared to 2018. Let's also look at the condos and townhomes, because really the story here in Santa Clara County has been that the single family home sector has been fairly neutral, right? We've experienced this not bottoming out, but we've experienced this neutralization, right? This steadiness in the single family sector here in Santa Clara County. But the condos and townhomes, however, have behaved rather erratically. And that started at the beginning of 2019, where we had a really sharp increase in inventory. And that sharp increase in inventory has been fairly consistent over the last 9 months or so. But now, as we look at this chart, you will see the condos and townhomes starting to neutralize in comparison to last year's numbers. Now, you have to remember, by September of last year, the market had already neutralized quite a bit. It had already come down from its spring high, if you will. However, what I also wanted to point out is that this number, this 656 number, is way, way lower than it was earlier this year. We were close. We were approaching 800 units. Now we're at 650. That's better, especially if you're a condo and townhome owner here in Santa Clara County. But it's also not too far removed from 2016. And I really like to compare these charts to where we were in 2016, because if you were around in 2016 and you were paying attention to the Silicon Valley real estate market in 2016, it was a really good year. It was a really good year in the sense that it was a very healthy year, right? There was growth there was growth in the average home price, right? There was growth in the average price per square foot, but it wasn't so chaotic. It wasn't like 2018 where the beginning of the year was just this meteoric rise, and then we had like a leveling off in the summer, and then this like really weird fall and winter. Like it wasn't like that in 2016. It was very consistent, and that's why I like to compare the numbers from 2019 to 2016. And when you look at the single family sector, you'll notice that we're really not too far off in terms of active inventory. We're only about 60 units off, which is like, in the grand scheme of things, not that much. I mean, that's like 5%, right? So it's nothing, peanuts. Now that being said, if you look at the pending sales, that's where it can get a little tricky, right? Because you notice we had a lot more pendings in 2016 than we did in that we currently do here in 2019. When you look at the condo and townhome sector as well, like I just mentioned, right, we're about 1.5x, but at one point we were looking at about 2x the amount of inventory. So things are generally seem to be tipping towards the sellers once again, and I'm not sure how long this is going to last. I'm not sure if this is a blip, but what we're really seeing is this kind of like ebb and flow, right? Like there's these kind of like peaks and valleys and but it's just very, very steady. There's nothing really happening on either side that should cause alarm. There's nothing in the market right now that should be alarming you of some sort of like devastating market crash or correction. Now, let's look at this other chart here. This just corroborates what I was saying, right? For the first time, year over year changes in the negative for active inventory, which means that we've seemed to have found this happy place for inventory, right? There was a sharp increase in inventory at the beginning of the year, and that could have been, that was caused by many things, right? There was this this time where really the inventory was so suppressed at the beginning of 2018 that what happened at the beginning of this year with the end of last year was a natural reaction, right? Because for every action there will be a reaction, and so for the suppressed inventory levels for a certain amount of times, it's going to go pop, and once it popped, and now it's like evening out. Is that oversimplifying it for you guys? I think you're a little bit smarter than what I just than how I just explained it, but I digress. Let's go to active listings here. What I've been talking about for a very long time now, everyone, is this idea that the market is not crashing. It is very, very micro market specific, right? And so there are pockets of prosperity and there are pockets of correction, borderline crash here in Silicon Valley. I mean, there are areas where there are pockets where growth has barely diminished, right? Like there are pockets where active inventory has remained fairly low in comparison to the growth that we've experienced in Santa Clara County, and there are some areas in which active inventory is almost doubled, and that's not. I'm not talking about areas in particular. I'm talking about little communities, right? And so in this time where we're in this correction and you're trying to make a buying and or selling decision, it is absolutely imperative for you to pay attention, not what's happening just in Santa Clara County. I think you guys get the picture. It's neutralized. Like there's ebbs and flows and everything in the grand scheme of things. That's the macro. Now what's the micro? How does that play into what you are experiencing as a home buyer or seller in your particular community? If you're a seller, or the communities that you are interested if you are a buyer. And so this heat map right here is the perfect example of what I just talked about. look at the active listings here. If you look at active listings, you'll see that there are many areas here that are in the black. What does in the black mean? Well, that means that year over year, there are more houses on the market than there were at this same time last year. Now remember, overall for this week, we are down, we are in the red. Yet in Campbell, we're plus 81%. It means 81% more homes on the market than there were at this time last year. So this is the perfect example of using the heat maps and using the data and figuring out, juxtaposing the market realities in your micro community versus what your goals and ambitions are and what you need and or want to have done in your particular situation. What am I saying here? Because I'm using like words and I'm gonna give you some context. If you're a home seller in Campbell, right, plus 81%, you have a lot of competition right now. You have far more competition than almost any other market here in the South Bay. That should tell you a couple things. Number one, it's gonna be harder to sell your home than it was at this time last year, right? Number two, it's probably gonna take more time to sell your home. And so what you need to think about is, well, do you need to sell? Okay, if you need to sell, then this isn't gonna sway you one way or the other. But at the same time, you should also be thinking, well, what are some strategies that I can employ? What are some strategies that I can employ to break through the noise? Because you're gonna have to break through the noise in order to sell your home quickly and for the highest possible price. Otherwise, what's gonna happen is that you're gonna sit on the market for 3-4 months while other neighbors around you drop their prices and give away your equity. It's just a simple truth. However, when we look at places like, let's look at Santa Clara. Same county, guys. However, -10 year over year. Now, nothing here is super dramatic, right? Like, we're in the double digits, nothing's in the triple digits here, so nothing is terribly wrong with this picture. However, if you're in Santa Clara, you're at -10%. Well, let's look at pendings, because this active still have the story, right? But then we look at pendings. Santa Clara is plus 52%. If you are on the fence about selling your home in Santa Clara, you need to be on the market tomorrow, right? Because there is less competition and there are more buyers in your area, right? Lower supply, higher demand means more money in your pocket, period. And so this is what I'm talking about right here. We need to juxtapose the macro realities, like the macroeconomics of all this, and then juxtapose that with the micro realities of your situation. Because right now in Santa Clara, if you're a home seller, you need to be putting your home on the market today. Literally today. And the same thing goes with Cupertino. You know, Cupertino here, plus 32%. I mean, we haven't seen that in a while here for Cupertino. And yet, you know, active listings, yes, we're plus 13%. But this whole region right here, this Cupertino, Santa Clara area is benefiting immensely from this, I want to call it the fall resurgence of the market. I think for the foreseeable future here in Silicon Valley, at least for the next couple months, we're going to continue to see numbers like this. And there's going to be areas that heavily outperform and underperform too, right? There's going to be areas that heavily outperform and heavily underperform. And there will be some markets that are, you know, kind of in the middle. But again, these are things that the media is not going to tell you, right? Like you're not going to read this on the front page of the Mercury News. Number one, it's boring, right? It's just true. This is boring. But number two, it's not sexy. And since it's not sexy, it's not going to sell. And since it's not going to sell, they're not going to tell you about it. And since they don't tell you about it, and they only tell you about the market crashing, you're going to continue to believe things that simply aren't true. Guys, there is nothing about that number. The market here in Santa Clara County, for the first time in a year, is in the negative when it comes to inventory, which means that we have less inventory right now than we did at this time last year. But the market's crashing, right? Also, we have more, there is less supply and more demand than there was at this time last year for single-family homes in Santa Clara County. But the market's crashing, right? I'm going a little bit slower pace today because I really want you guys to soak this in. There's a lot of information here. We haven't even covered like 75% of it. We still got a ways to go. Next thing we want to talk about here are active listings in the northern part of Santa Clara County. This is something we haven't, these heat maps we haven't looked at or explored in a while. But if you notice, there's definitely more active listings than there were at this time last year, which is, you know, if you're living in Los Altos, you should, in Los Altos, not Los Altos Hills, I mean, plus 72%, there's a lot more competition. However, we need to look at the pending listings, the pending heat maps as well, because that also tells part of the story. 82%, so look, Palo Alto is up 27% in terms of active listings, but pending sales are plus 82%. So the demand is there. Yeah, there might be more houses, but the additional inventory, for the most part, is being absorbed, and then some. So home sellers shouldn't be concerned if they're living in Palo Alto. Now, keep in mind, everyone, what happens in the top end of the market in Santa Clara County, and by literally the top end, right, like the Mid-Peninsula there, but also the top end in terms of price point, trickles down to the rest of the county. And so when you look at this heat map here, and you're seeing an increase in listings, but also a much larger increase in pendings. That should tell you that eventually we probably will see more inventory in Santa Clara County, maybe even approaching 2,000 units, but that additional inventory will be absorbed. The demand is still there, folks. The demand isn't going anywhere. The market is proving it in real time. The demand is there. Now, the demand is there for single-family homes. Is it there for condos and townhomes, especially in some of the less desirable areas? Not really, right? And so that's why, if you own a single-family home right now, you're fine. If you own a condo or a townhome, there's definitely more nuances to your situation if you're a home seller, right? And so that's why this data, these micro areas, all this macro data is relevant to you, but what you really need to be focused on is what's happening in your specific community. Capiche? So, just a couple more slides here, everyone. But one of the last things I wanted to cover is the list to sales price ratio. There we go. Here in Santa Clara County. Now, look, if you notice, almost everywhere, in fact, everywhere is above a 96% list to sales price ratio, which is very good, except for Saratoga, we're at 94. But almost everywhere in Santa Clara County is at or above 100%. It is in Cupertino. Look, if we're looking at Cupertino, Santa Teresa, East San Jose, Alum Rock area, and Milpitas, we're all over 100%. At or above 100%. But the market's crashing, right? I'm sorry. It's too easy to poke fun at some of these headlines because, again, what I really want to drive home, everyone, is that what you're seeing right now is real-time data, and what you will eventually come to find in maybe 6 weeks, 8 weeks, 3 months, is that the media outlets will catch up. They'll talk about some sort of like miniature resurgence in the market here in Santa Clara County, but you're getting this information in real time. And so you need to use this data, you need to use this jumpstart of information in your favor, right? And so, again, this is macro, right? And so for your specific situation, it really would require an in-depth conversation. Really going, what would really be required is an in-depth conversation to go over your situation in particular, because there are so many factors at play, and especially in a market that is not as volatile, but where you have this sort of, stabilization occurring, because it's stabilizing, right? Stabilizing, it's not stabilized, right? And so as you stabilize, you have these like little, and so because of you like the sound effect, I'm sure. But in this stabilization period, right, there's going to be times where it's more advantageous for you to make a decision and less advantageous for you to make a decision. And so don't be late to the party. Don't be early to the party either. Be on time. And the only way to be on time is to, let's face it, is to have a professional come out and really make sure that you're making the best decision for you and for your family. Because ultimately, me, my team, and the good agents out there, they really pride themselves on making you the victor, right? Making you a winner. And my team really pride ourselves in helping you make the decision that's best for you. And if that means not having to sell right now, if that means waiting 3 months, or if that means waiting 6 months, or if that means putting your home on the market tomorrow, we're ready to help you make that decision. Or we're ready to tell you you're not ready, or this is not the best time for you to make a move. And as we go on in these next 2, 3, 4 months, there are going to be situations in which we gauge and we say, look, right now, not the smartest decision. And the way that we do that is really go over the finer details of your unique situation. I'm rambling now, but do you guys get the point? Here's the punchline. The punchline is all this right here, all of this should paint a very large, grandiose picture for you. You're gonna get some of the larger facts, but the smaller facts, the facts that are more relevant to you, can only be discussed one-on-one, because your situation is going to be very unique. And so that's the punchline, right? Ultimately, this gives you a rough outline, but if you want the full sketch in color, we need to sit down one-on-one. But anyways, that's all I have for you today. My goodness, it's a 22-minute long video. But that's the way the cookie crumbles sometimes. That I made up for 3 weeks of lost time. Everyone, if you have any comments or questions, concerns, thoughts, go ahead and send me an email, leave a comment down below. You can also text me, call me, beep me, if you want to reach me. This is Danny Gould, everyone, with the Gould team, selling Silicon Valley with your Silicon Valley Market Snapshot, and we'll catch you all in the next video.